Hi friends, welcome to our channel Stock Informer. Let's dive into today's stock discussion.
Hey everyone. Welcome back to the channel. I'm your host Natasha, and today we are diving deep into HDFC Bank's latest quarterly results. India's largest private bank has just announced its Q2 FY 2025-26 earnings, and trust me, there's a lot to unpack here. From record profits to a major IPO windfall, we'll analyze everything, and by the end of this video, I'll tell you whether HDFC Bank is a buy or a sell right now. So, let's get started. HDFC Bank, the crown jewel of India's private banking sector, has once again delivered a solid set of numbers for the quarter ended September 2025. Let's quickly go through the key highlights. Net profit, 18,641 crore rupees, that's up 10.8% year-on-year. Total income, 91,000 crore rupees, up around 6.5% year-on-year. Gross NPA, 1.24%, which actually improved from last quarter. Net NPA, just 0.42%. And the capital adequacy ratio remains a strong 19.96%. In short, HDFC Bank remains rock solid when it comes to financial stability. Now let's talk about what's driving these profits. The bank's interest income, that's the money it earns from loans and advances, rose to 76,690 crore rupees. Meanwhile, other income came in at 14,350 crore rupees, which includes fees, commissions, forex income, and investment gains. But here's the interesting part, a big boost this quarter came from the HDB Financial Services IPO. HDFC Bank sold part of its stake, earning a whopping 9,128 crore rupees in one-time gains. That's a smart strategic move, it adds liquidity and unlocks value from their subsidiaries. Now, where does HDFC Bank make most of its money? Let's break it down. Retail banking, the star performer, 75,500 crore rupees in revenue. Think personal loans, auto loans, and home loans. Wholesale banking contributed 42,000 crore rupees, this is loans to corporates and big businesses. Treasury operations, 20,600 crore rupees, thanks to good investment income. And the insurance and financial services arms, HDFC Life, HDFC Ergo, and HDB Financial, together make the consolidated numbers look even stronger. Now, for the financial nerds out there, here are the key ratios. CASA ratio, around 38%, slightly lower, which means more money is flowing into term deposits due to higher interest rates. Gross NPA, down to 1.24%, proving HDFC Bank's credit quality is still the best in the business. Return on assets, about 0.97%, stable and healthy. Capital adequacy ratio, 19.96%, way above RBI's minimum, meaning the bank has more than enough cushion to expand lending safely. So operationally, HDFC Bank continues to be a fortress. Holder got one free share. This boosted liquidity and attracted new investors. Floating provision, the bank added a 9,000 crore rupees buffer for future contingencies. That's like creating an emergency fund, a great sign of prudence. Subsidiaries, HDFC Life, HDFC Ergo, and HDB Financial Services continue to be growth engines for the bank. Together, they diversify income and lower risk. Going forward, I expect credit growth of 12-14% annually and steady profit compounding as integration synergies from the HDFC merger start kicking in. Of course, it's not all sunshine. A few risks to note. Margin pressure. Deposit costs are rising faster than lending rates. CASA decline, more people are moving funds into fixed deposits. Regulatory watch, RBI has been tightening rules around unsecured lending, something that could slow down retail loan growth. But the good news? HDFC Bank has one of the best risk management systems in the country. So, is HDFC Bank a buy or a sell right now? Let's crunch the numbers. FY2025-26 expected EPS, around 48 rupees to 50 rupees. Current PE ratio, around 18x, which is fair for a high-quality bank. that gives us a target price of 865 rupee to 900 rupees, post-bonus, translating to around 1,750 rupees pre-bonus levels. My view, this is a buy for long-term investors. If you are holding it already, continue to hold, because HDFC Bank is built for consistent compounding, not overnight returns. So, there you have it, HDFC Bank continues to prove why it's India's most trusted private bank. It's steady, disciplined, and future-ready. If you found this breakdown helpful, don't forget to like, share, and subscribe, because I'll be back next week with more detailed financial breakdowns and stock analysis. Until then, this is Natasha signing off. Stay informed, stay invested, and keep growing your wealth.
That's all for today's market update. If you gained valuable insights, please consider liking this video. For continuous access to our expert analysis on Indian share market results and announcements, be sure to subscribe to the channel. Your support by sharing this video with your network is also highly valued. Thank you for tuning in.